Good morning, everybody. It's Monday, April 8th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here had May corn up a half at 434 3/4. May soybeans were up 3 3/4, 1188 3/4, and May Chicago wheat was up at 569 1/4. No export sales announcements here this morning, so we'll kick it off. Dustin, good morning. We're talking a little bit before the show. Friday's Commitment of Traders report was pretty interesting to see actually funds getting shorter in the corn and soybean complex, which is quite interesting given, the open interest drop that we've seen. And we were kind of looking for the potential shift of ownership here. And I don't know that we necessarily got that from the report. So I'll let you dig into that here a little bit to start us off this morning, and we'll go from there.
Yeah, thanks, Dan. Yeah, I actually have a table that might help show this a little bit better too. So in this table, we're looking at net commercial positions in blue and net managed money positions in orange. And this is for this week, this time of year, going back to 2007. So we can see, that there's very little, net short position compared to where we normally would be on the commercial side. So kind of like what we've been talking about the last couple of weeks is commercials are not holding that many shorts for this time of year. The ones that are really holding it is managed money in orange, which is not very typical either to be this short this time of year. The last time we saw this was 2019. There was an event that spurred funds out of this short position, which is the delayed planting that year. Of course, it could turn into kind of a headwind to a tailwind if there's something that pops up to cause funds to kind of be scared out of the short position. That's why we keep kind of focusing on energy and some of the geopolitics that are happening. If for some reason that were to explode, maybe that'd be one of the catalysts. Right now, though, not a huge catalyst for funds to get out, and that's what they showed us last week. They actually increased their shorts, and the commercial reduced their shorts. So that's a bit concerning, right? We would think that part of the reason that we've had such a struggle here as we turn the new year is that growers, need to get rid of the old crop. And it was assumed that they were historically undersold going into this time frame. And we've seen a lot of spread widening recently, which is kind of showing that, they are showing up to sell basis only contracts, DP, as cash flow needs are being met. But if there's still a hangover of those types of contracts out there, specifically DP and basis only, that still have a futures yet to price on it, that could explain why that net commercial short isn't really there at the moment, despite the crop size. So that's one theory behind it. But and that would be a concern for us, right? If there is still a large farmer sale that needs to happen for old crop, there could be more spread widening. There could be more front end weakness if there's no other catalyst to jolt markets. So it's not really what we wanted to see for selling opportunities into the spring seasonal window, spring and early summer. It kind of shows that the position has not been cleaned up yet.
So does does the farmer got enough cash, Dustin? To not, be enticed. We had a pretty significant rally in the cash markets. And if the idea is they're still holding that big position, or was there just that much to chew through?
Yeah, I don't even know if it's even as much of a cash flow thing at this point, right? We're already going into loan renewal season. It's certainly going to be the case for some growers, not others. It's more of no one's going to carry old crop bushels into new crop, right? There still needs to be a transfer of ownership that happens regardless of the need for cash. So if that transfer hasn't happened because everyone's kind of kicking the can down the road because they haven't liked the price, it forces too many market participants, i.e. the farmer, to act accordingly all at once. And that's where you get larger drawdowns in the market. At least that's the theory behind it. So too many people are operating with the same position at once. You tend to overwhelm the other side of the market. The buy side might have already come. Margins have been good. I'm sure end users have been trying to lock up margins where they can, especially on the board. If the sell side, the grower hasn't come to the table yet, then that creates weak points in the market. And that was kind of the theory. Especially going into weeks like last week, it looked like there was a big transfer of ownership that happened because we saw a sudden widening of spreads, especially in the May contract. The May July fell a couple of cents in a very short period of time, despite kind of a friendly stocks number. You would think that transfer of ownership should be happening right now, and it doesn't appear to be on the Commitment Traders report, at least.
You could be, you're 7 months into the season, right? So you're over the halfway mark from when the marketing year starts in September 1st. So we could also see that a lot of these sales that we have seen is all spot sales. Taking grain in, spot selling it. You wouldn't necessarily see that as a forward contract on the board or a futures contract. It would just match up. So you could be seeing that, which might make some sense just because it's literally just freeing up cash. So that might make sense on some of it. I mean, it does show that certainly not seeing a lot of forward contracts or things of that nature being placed by the farmer, as far as ownership's concerned that way. That's the only other thing I could think of too, is that a lot of it's just been hand to mouth when cash is needed, kind of more piggy bank type marketing, that kind of thing that wouldn't necessarily be reflected in futures and options as much as like forward contracts or things like that.
Yeah, and that begs the question too, is like, okay, are the funds planning on getting out? Because right now they've got some really good roll rates in corn that they can stay with that position for a long period of time. If the market stays sideways, there's a pretty good dividend to collect right now. Just because they're buying the contract in the lead month and then they're selling the next month at a 12, 13, 14 cent premium. And then you continue to roll. If you see a continuous chart remain flat here in the lower fours for the year, that would be the December contract coming back down into the lower fours. That's the dividend we're talking about, right? They're always buying the cheaper front end and selling the more expensive back end. On a flat price chart, it might not look like corn's going anywhere. Reality, that carry continues to be lost if we're expecting, sizable carry out again. Obviously, stocks and acres is about as good of a report as we could have hoped for the grower that's looking to make sales last week or a couple weeks ago when we saw that. We would have thought that might have triggered some short fund covering, buying back out of their shorts. But again, that's why it's just a little bit concerning to see that they actually added shorts that week.
Well, and the weather, right, in South America flipped to a really wet pattern, I think is what we've seen recently too, right? So to your point, Dustin, if we have these old crop bushels that aren't being priced, and we do have a big crop in South America, it's directly going to compete with those old crop bushels this summer. And that would suggest really, really wide, July D spreads or something like that at the end. So,
yep.
Yeah, I think, we talked about this after the report, did the report just bring some balance to it, to this market? I think, it was one of those like, hey, maybe this will turn into a bull market. I think we can safely say that's not the case. Maybe just stem the bleeding and made it more of a balanced trade. We still have to grow a crop, all those kind of things. Took some acres out of the matrix, right? So maybe just brought things into a little bit more of a balance. We haven't seen it really necessarily in fund covering or anything like that because of all the reasons that you're stating. They're paid too well to keep that short until they're forced out. But maybe it's kept. I mean, we've kind of chopped around in this range. We kind of collapsed after the report, rebounded back towards the highs of the week. So maybe we're just kind of consolidating these moving averages, and it's not bearish enough to just go pile drive it down to $4 at this point. Maybe it's a slow bleed as we get more, fundamental information just because of the market structure. I just don't think it's something that's, hey, we're going to go collapse today, or we're going to take off. Like there's just not enough information to say we're turning into a bull market. But maybe we've got enough friendly things here that the market's willing to just kind of stabilize here until we find out more information.
Yeah, I'm just gonna kind of jump on that from a little bit of the flip perspective, because we always talk about it in terms of the funds covering. And in 19, I was working for a major commercial, and I think one of the things that you really need to see in order to get that sort of rally, which if you go back and look at it, it was right at about a 20% rally, is the grower has to be concerned about his crop that's in the ground, going in the ground, etc. And the trend money moves in the path of least resistance. And when they pull those bushels off the market because they're not sure about their crop, maybe they start buying back hedges. We had a tremendous amount of acres that year that went into prevent plant, and it really reverses the the skew that we talk about between the end user and the grower, and they play a big part in that as well. And I think if I'm following the data correctly, that Dustin's saying, we think that a lot of those bushels are unpriced in storage on the farm, and that creates the dynamic where you can get a really good up move, but we just don't have that. We don't have that catalyst today.
Yeah, no, I agree.
Well, and you look at it too. I mean, I think we'll get crop progress and conditions here at 3:00 today, 3:00 Central. We're not going to see a huge jump, obviously, this week. I think for the most part, it was pretty wet last week. But looking at weather patterns and stuff, I think guys, central part of Illinois and south are they're going to start getting some stuff done. It looks like we're shifting a little bit, which will be good to see on that front. Ryland, livestock markets been pretty volatile here the last 10 days or so. A lot of outside news and things going on. Saw beef production was up 4.2% last week. Pork production also higher. And one interesting thing to note, and you've touched on it a little bit, is just the funds continuing to pile in and buying hogs. So get something for us on that.
Right. I mean, it seems like the hogs are a lot more compelling right now, just from a demand standpoint. I mean, obviously, beef cattle prices are still at record high prices. And I think everybody is kind of on board with pork kind of stealing a lot of this demand as we get into the summer season, into grilling season. It's just, we're at high prices. Anything can happen. That can happen. And we've got some, right now it just seems like we shrugged off the last hog and pig report to some degree, and it just, the managed money wants to stay pretty long here. I mean, this is the time where you typically make your seasonal push. Those are big seasonal precedents for pork prices to rise, cash prices to rise. And I think you're going to find a lot of competition this year, especially at the meat counter, and pork being a very viable option. So I think that's at least some of the story. I don't know if that's the whole picture right now, but that's at least just kind of the 10,000 foot view at this point. But, we're seeing a liquidating cattle market again, and this conversely, you've got June hogs back to contract highs. So, I mean, it's just that final push. I mean, I think people want to see some bigger prices here as we get into the summer months for hogs, but we've seen them pretty much dogpile in here. You're right. I mean, open interest was up, 7,000 contracts on Friday. So we know that, I think there's a lot more optimism. I think there's a lot more eyes on the hog market. Plus, there is no real disease issues that we know of. It's not like the bird flu situation has really kind of made it into that aspect of the livestock. I'm not saying that it can't, but I think that could be a concern a little bit and something to watch on the headlines. But we are at this point, the funds are sitting with 76,000, 77,000 net longs. They added nearly 12,000 as of last Tuesday. So the story's kind of there right now, even, with a pretty decent supply in front of us. So it just seems like we're really trying to play that seasonal momentum in the hog market. On cattle, it's anybody's guess how this thing reacts, but I think there was a little bit more going on than just a little bit of bird flu, being found in Ohio last week. There weren't any new cases over the weekend that I saw. I know Jason said he may have heard something, but we were trying to track it down. But nonetheless, I mean, that may be part of the story, but it's also first notice day today in April. So I think there's a lot of natural sell pressure that kind of had to come to the market here. We needed to see some liquidation, some rolling forward. So I think that's pretty typical at this time. I just think everybody's a little bit nervous about the basis, especially with cash trading 184 to 187 pretty much around the horn, and the board sitting at 178. So this happens a lot in those liquidation markets. Hopefully we can see some stability, but it's, right now it seems like people are a little bit nervous about this price in cattle and how sustainable this is really going to be going into the summertime.
Hey, Ryan, I got a question on that. A lot of times we talk on here about intercommodity spreads, but we focus on grains. So we talk about, the inverse relationship between wheat and beans or meal and oil. Is that same kind of thing as, for instance, hogs and cattle? Do you see hogs take off because cattle's liquidating? Do you see a lot of intercommodity spreads when it comes to the meats like that?
When we're at these high prices, yes, it's happened in the past before, and I think that's been an interesting trade just over the past couple weeks too. So I think it's something to look at. I haven't drilled too deep down on the numbers, but it feels like that's happening. We saw this long time ago when hogs, traded up to 120 the first time, and cattle were setting record highs. So I mean, I think you get a lot of opinions that, hey, this, the demand's going to go towards the more affordable meat, the more economical situation. I mean, we're also talking about a retail market versus a wholesale market. So that's always kind of tough, but it does seem like, June has had a little bit more active trade on it just over the past couple of weeks. So I think you're getting those kind of opinions in the market. If beef's going to lose market share to pork at some point. Sure. I mean, I think that's happening right now as we speak.
Oh, very good. Real quickly, Nick, I do agree it is too early to warm, and we are optimistic about our planting pace. And good luck to your boilers tonight. It should be a fantastic game.
That's really the big news over the weekend.
That's the biggest.
Let's face it.
I mean, there's a solar eclipse and championship game with Purdue, so this might be our last day on Earth.
This is it.
That's good stuff. So, it is going to be awesome. You got the two best teams for sure. Should be a great game, I hope. Couple things administratively here before we wrap. We will have USDA report WASDE out on Thursday, 11 o'clock Central. CONAB will also be out. As I mentioned earlier, we'll have crop progress here today at 3 o'clock. We'll talk about that tomorrow. We just came into the open. We've got May corn unchanged, 434 1/4. May soybeans are up 3 at 11.88, and May Chicago wheat is up 2 1/4. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Thanks for the conversation this morning, guys. It was real good. Look forward to talking to everybody tomorrow. Go Boilers, and have a great day.